All right, good afternoon, everyone, and welcome to the PivotBoss Google Hangout for March 2nd, 2015. This is, for those of you that are new to PivotBoss here, this is something that I've been trying to do on a monthly basis here recently. So the first Monday of every month, we're doing a PivotBoss Hangout here, where basically I provide a market outlook for the various futures contracts that we follow at PivotBoss. Everyone and anyone is welcome to join, and this is provided basically to show you and introduce you to what I do and how I analyze the markets, and also to provide you with some forward-looking analysis that hopefully is actionable and that you can make money from throughout the course of the month here. For those of you not familiar with me, my name is Frank Ochoa, and I am author of the book Secrets of a Pivot Boss. Which brings me to this point here. I'm going to be, let's bring this up for a moment here. What I wanted to do was bring up this page for a moment so that you can see this page. And basically this is the recent offer for Secrets of a Pivot Boss, which is my book. We have a special offer on it. We haven't done a special offer in who knows how long. It's been at least a year, maybe longer. But what the current offer is, if you buy Secrets of a Pivot Boss, or if you've bought recently, then you will also be included to attend the next course that I'm releasing, which is called Introduction to PivotBoss Pivots. So this is going to be my first time introducing PivotBoss Pivots. You'll also get Secrets of a Pivot Boss, and you'll also get the custom PivotBoss indicators for Thinkorswim and for Market Delta. And so this is something that I wanted to provide for anybody that's bought the book before, and also for those thinking about buying the book right now. So this is the current offer. If you get there anytime throughout the week, you'll be invited to attend the course coming up, Introduction to PivotBoss Pivots, and that's going to be March 6th, this Friday. So Friday, March 6th at 3 p.m. is going to be the course. You'll also have the PivotBoss indicators. It's going to be fantastic. And for those of you not familiar with the book, please visit pivotboss.com and click on any of the Secrets of a Pivot Boss links and come down here and check out this page. I've gotten basically great feedback from fans all over the world that is just phenomenal feedback. And I always get feedback throughout the week, every month over month. And what I wanted to do was provide a special offer here for those that have yet to see the book. And here it is. It's going to be fantastic, something that I believe every trader should have in their trading arsenal. And what I wanted to do with our PivotBoss Google Hangout this time around was I wanted to basically cover the markets using the material from the book. And it's going to be a way for you to really see how I engage the market. Basically using the material covered in the book with pivots, with auction market principles, with market profiling, volume profiling, those types of things is what I use in the book, what I've taught. And what that does, it really provides a major foundation for traders. So if you are an aspiring trader, beginning trader, novice, or still trying to get over the hump, a book like this will really help a ton. This is cultivated over years and years of experience, so much research, and it's been a book that's been fantastic for anybody that's really come in contact with it from the testimonials and feedback I've received. So this is something that I still believe should be in every trader's toolkit. And what I'm going to do is follow the markets here using some of the ideas from the book. So let's go ahead and get started first with the E-Mini S&P 500. This is a daily time frame of the ES, and if you go back to the PivotBoss Hangouts that we had over the last few months, really what I've done is I've identified areas on the charts where responsive buyers and responsive sellers have wanted to do business. And over the last few months, what you see here, let's grab a pencil here. All right, here we go. So what you have here is I have a key range that I developed here from 2072 quarter down to the 1961 half, right? That was the key range we had been talking about. Price failed to hold above the top of that key range, and that implied sell-off back toward the bottom of value and the bottom of the key range, and it did. Price came back to that zone, And this is where I mentioned bulls, OTF responsive bulls would want to come in and defend for a shot at returning price back up within the boundaries of the key range, and with the shot at seeing upside expansion through the top of that range. And if you go back to the early February, I was talking about this key range and how no matter which way it goes, price on expansion, it was likely going to be a significant move. So this is the key range that developed. Look at all of the trading range behavior that occurred within that range, and that usually leads to expansion. So this is one of the major concepts from the book, which is compression leads to expansion, and expansion leads to compression. So that's one of the major fundamental things that you got to look for in the charts, and it's really something that works time and time again, and it's something that I always look for. What I mentioned about this compression was that we had a lot of compression here over the last 4 months or so. We had one pass up within the range, another pass up and down in December, multiple in January, and then a rally through the top in February. So a lot of months here. And what that does is it basically, that's showing you where buyers and sellers are entering the market. Buyers are defending the bottom of this zone. Sellers are defending the top. And what that does is it provides a two-way trade in the market. And if you recall, the market is really around to do one sole purpose, and that is to facilitate trade between buyers and sellers. So it's facilitating trade between market participants, right? So if you have a lot of buyers coming in to defend down here, you want to buy the dips, buy at rejection, buy at support, right? Buyers are coming in to defend down here, and their sell stops are down below. Meanwhile, you have sellers up top, and they're looking to defend all the key zones up at the top of the range. And where are their buy stops? Their buy stops are up here. So if the sellers are wrong and price triggers these buy stops, you get a momentum move that leads to this type of trend. So you get a breakout and a continuation. And that's what we've seen recently. If that breakout would have occurred through the downside, these sell stops would have triggered, and that would have sparked a sell-off through 1960 and into the next key support below. So that's why these ranges are really fantastic, because it really doesn't matter which way price goes. It's just identifying that there is expansion to come, waiting for the break, or looking to position yourself on the other side so that you anticipate the break. That's really what professionals are doing, and that's really what the book teaches, is looking at the market through the lens of auction market principles. Auction market theory in general is something that everyone should have in their tool case in terms of setting a tone for how you approach the market as a professional. With auction market theory, you're looking to classify the types of buyers and sellers and look to identify a primary approach to the market that involves buying below value and selling above value, defending value in an uptrending market, defending value in a downtrending market, those types of things. And in this case, bulls were defending the bottom of value here in hopes of seeing expansion through the top of the range. Bears were defending the top of value here in hopes of seeing expansion through the bottom of the range. And that's what happens every day in the market, in every single instrument trading across all time frames. So now that we have the upside expansion here, this recent rally throughout February now really led to a couple of weeks where we really didn't see much action at all. Prices basically traded from $20.99 up to $21.17, a very tightly coiled range. What I've been telling my premium members is that this narrow range right here will likely spark the next trending move on a week-to-week basis. And it really doesn't matter which way we go again. But what I've been telling our traders is to defend 2100. $20.99 to 2100 is the zone to defend for a shot at squeezing through 2117 and into 2127, followed by a potential move into 2145. So that's the primary objective for the week that I laid out last evening, Sunday evening, for our premium members. Defend 2100, and that's the highlighted area, and with the hopes of seeing a move into 2127.5, and that's an expansion level, a 50% expansion level from the key range where we just broke out from. Followed by a move into the primary weekly target. The ADR target is 2143.25. So that's the idea. Defend these 2100s and look for moves into these targets by the end of the week. Now bears, on the other hand, they want to defend, and they're looking to defend prices at the previous week's high, 2117, for a shot at taking out stops through 2100, and running those downside sell stops into the next key levels below. And we have key levels at 2080 followed by 2072. So basically, this is kind of the rhythm of the market on any given day, any given time, is looking for these types of opportunities where basically buyers, you know where buyers are positioned, you know where sellers are positioned, and then you know where those stops are on either side. Whoever wins, whoever loses, that's going to influence which way price goes. So bears are always going to be looking to defend the previous week's high in an uptrending market for a shot at running those stops, whereas bulls will always be looking to defend pullbacks to support in an uptrending market. And that's the whole goal of trading, right? It's to identify which way price is going, and then identify when price is cheap within that trend or at a premium within that trend for a shot at pushing prices higher. When you identify those pullback areas, that's where you defend for another wave of strength or weakness. And in this case, we're trending up, and 2100 remains the key level to watch for bulls. So on a longer term basis, one thing that I mentioned before was the fact that prices had been trading within this key range here, right? This range is the one I'm talking about. And if you notice, we've been trending up for some time. I mean, this has just been a significant trend where prices have just been uptrending the entire way, ran some stops here, pushed higher, and then coiled up before seeing expansion. And in the overall midst of the uptrending structure of this of the ES over the last couple of months, it really doesn't matter how much price pulls back. Right now, the market as a whole is a buy the dip market. And I've been saying that to our members the entire time. Now, one thing I did mention was that if price broke this trading range to the downside, we could see a pretty significant move downward, but that move would likely be defended for a longer term buy opportunity. The entire idea this entire time was that this range forming at a high would likely break to the upside. And when you have a range that spans 3 to 4 months, that means that you could see a trending move for 3 to 4 months in the direction of the break. And so if we're breaking to the upside and we broke this thing middle of February, look 3 months from now, that's middle of March, April, May. Now you're into a trending move into May, and that may be the time where the market will look to sell in May and go away, as the adage would go. So there's a couple of things here that just suggest that we could continue higher, and if we do, we kind of have some time frame analysis behind us, which would help to identify where we could top out April, May-ish. And also we start to use our key targets above. And in this case, the key target that I'd be looking at is 2182.75. That's the first major key target. We also have 2209. So those are the two major targets to play to, and they're based off of these key ranges. This key range from 2072 to 1961 here has a 100% expansion target right here at 2182. Meanwhile, the larger pattern from 2007 down to what was that, 17 something or 18 something, that expansion target 100% puts you at 2209. So what I'm looking for is just a continuation toward those targets in a longer term. So basically, if prices are defended at 2100 here, the idea is to look for a push into 2127 followed by a move into the weekly target here, and that would take us to the end of this week. So we're looking for a push into 27.5 and 43.25 by the end of the week if prices can continue to hold 2100. And then over the course of the month, you're going to look for a push into 2176. That's the primary monthly target with a shot at reaching 2182. So this zone can be reached by the end of March. And of course, anything can happen. These things can go very, very quickly when they want to. So that's the bull side, looking outward a little bit. If you flip it around to the bear side, again, 2100 is the level to watch. And if you look at it this way, if price is basically trading in a very narrow range here this entire time, and if I zoom in, you can see this range even better. Here's 2100, right? And this is the top of the previous range right here. Price went bid through it here on this big green day, and then price came back and held it as support here, and that set the tone. That's why on this day I was so adamant the night before, buyers need to defend 99 to 01, and they did. And then price has been defended at that zone ever since. So what happens here is that you have bulls that came in on day 1. Then you had bulls defending day 2, day 3, day 4, day 5, day 6, day 7. Now you have 7 days of bulls defending this zone at 2100. If they don't get paid and price breaks through 2099s, you start to run those downside sell stops. So now you have 7 days of buyers that are going to look to head for the exits, and that's going to spark a quick move into 2080, followed by a move into 72, and perhaps even the HVN at 57. So now what I like to do once you get that idea in the books is I like to come over here and then look at what the primary bear targets are going to be for the week and for the month. So for the week, the primary weekly bear target, the ADR target right here, is 2072.75. And then we have the primary monthly target at 2041. So obviously, you know, those are far away. But again, if you have support that gives way and all of a sudden the sell stop's coming out, that implies a move into these downside targets. It's not about where you think price is going to go or where you hope price is going to go. It's more about looking to see where buyers and sellers are establishing positions. And then from there, look to see who's getting forced out of their trades. We know that there is increased inventory of sell stops below here. So bears are trying to pluck away at that support. Meanwhile, buyers know that this is the area to defend short term with little to no risk down below. You don't have to put a far stop against you to know you're wrong. From here, you're just defending a solid level for a shot at squeezing the bears that are defending up here. So it's just a game of back and forth here. So that's basically the intraday movement here that we're looking for, is looking for buyers to continue to defend 2100 to 2099 for a shot higher. Failure to hold that level runs the stops down into 2072 and 2080. All right, so that's the ES there with some of these key targets nailed up. Basically, the other thing I wanted to talk about in terms of the ES is now a look at the pivot range, because today was the first trading day of the new week of March and also the new month of March. So we had brand new day pivots, brand new week pivots, brand new monthly pivots, and those are always something to look to at the beginning of the month. So one of the things you'll find in the book is the pivot range, 1, 2, 3. It's these 3 pink lines, and these 3 pink lines, you know, there's something that I've used for a long time, and I got them from Mark Fisher's book, The Logical Trader, and he explains his ACD method in there in that book. And basically, I've used the pivot range for my analysis, and then I developed ways to help me forecast price movement, to help me forecast when the key zones are to engage the market. And one of the things that's really important with regards to the pivot range is width. Width is a big thing. From the top of the pivot range down to the bottom, this is the monthly pivot point, and basically this pivot width, if it's narrow, can imply or forecast a trending market to come. And if the upcoming range is wide compared to average, that can imply a trading range market to come. And that's something that I'll be looking for, because you can see here it was narrow but not super narrow compared to average, and then price had a big time trending month. And then after that trending month, you've seen the new pivots for the new month are significantly wider from the top to the bottom compared to what they had been, right? So anytime you had wide pivots, that means that the previous action was rather wide from high to low, And what that can do is it gives you a warning that we may not see a trending month here for the ES. What we may see is a trading range month. So if price does indeed fail to hold below 2100s and drops back to say 2072, this could be an area where buyers might want to volley the ball back up, and then sellers volley it back down, and then all of a sudden you see a trading range develop on these highs. And it was all predicated by this large high range or high width pivot range right here. And that can give you an implication of what may happen. So oftentimes what I'll look to do is look to identify those stocks or those ETFs or those futures that have a narrow width pivot range, either for the week or for the month or for the day even. And then from there, that would help to imply that that issue or that instrument is likely to see expansion during that upcoming period of time. And that's something that you can look for all the time, something that works more often than not. So that's the monthly pivots. Now, obviously, there's also weekly pivots as well. Here's the weekly pivots. And this is something, the weekly pivots give you much better idea of the trending nature of how to use these in a trending price structure. Because in a trending price structure, when price is just predominantly trending up or trending down, that trend, when you have higher highs and higher lows, ideally, typically speaking, bulls are looking to defend the weekly pivot ranges in that uptrending price structure. So one of the things that I always loved when I first started trading, you know, I'd absorbed so much of this information. And one of the things I always heard was, if you really want to know how to trade well, just learn to buy the dips and sell the rips. And I thought, wow, that's fantastic advice. I'm going to go try that. And then I'd go look and I'd think, well, how does anybody know if that's a dip or if that's a rip? How do you know when it's done pulling back? And one of the things that really stuck with me is the pivot range, and how in a trending market, more often than not, is the zone. That's the zone that represents where traders are defending for buy the dips in an uptrending market. So you can see here, traders bought it and we got a rally. For 2 days, buyers absorbed and we got a big rally. For an entire week, traders absorbed, buyers absorbed, and then we got a push up. And the same thing happened here. So in a trending market, that's one of the principles you'll learn in this book as well, is that you will see buyers defend the pivot range in an uptrending market, sellers defending the pivot range in a downtrending market. And that's something that can be super helpful in your trading for both analysis, prospecting, and even intraday trading, because this is a weekly pivot range. And that weekly pivot range can be used intraday. It can be used in a higher time frame like a daily chart, but you can also create daily pivot ranges, 2-day, 3-day, you know, whatever you want, 2-week, yearly. So all of these, what I love about what I do, anytime I'm teaching anything from my book, what I'm doing is, or anytime I teach anything in general, I'm teaching methods and approaches that are scalable in any time frame and can be applied to any instrument you're trading. So it doesn't matter if you're a real-time trader, a swing trader, a position trader, an active investor. These tools are price-based, market-generated tools, or volume-based, market-generated tools like this volume profile. And all of those self-adjust volatility. They identify areas of value, areas of rejection. They do all sorts of things that help traders like you in any time frame. So you're not having to learn a million different styles of approaches for different instruments or different time frames. All of this stuff is scalable to any time frame and can be used across the board with any instrument with valid volume and price action. So one of the things about looking at this chart right now is that immediately I see that there's a very narrow pivot range for the week. And look at how wide the pivot ranges have been week over the last several weeks. See, it's rather wide, right? And then you see this one right here where it's very, very narrow. That narrow pivot range right there implies that this week could be one where we see expansion. And again, it really doesn't matter which way we go. Expansion could be significant. So we'd be looking at perhaps a 30-point move if these 2100s are given up. Conversely, if price can get above 17s and make it support, we can be looking at a 30-point rally to the upside into 47s to 50. So that's kind of a look that we can take here for the ES as we head into the beginning and into throughout the month of March. I still think that given the fact that we have broken to the upside through the top of that larger trading range, that implies further uptrending price discovery ahead, likely into the upside targets that we have, the 2182 and 2209s. And those are two targets that can be reached by really by April. So if we're trending into May, we might be seeing targets much above, and we still have targets beyond that as well. Failure to hold 2100 again could spark a nice pullback, but again, that pullback is likely going to be a solid buying opportunity on a swing basis. All right, let's take a look now at crude oil. Crude oil has been fantastic, and this has always been one of my favorites once I really understood how to trade it and trade it well. But it's been something that we've really had. We've had a solid analysis on this one for a while back. We knew that below 80 here, 80 was a significant level. We knew that below 80 opened up no support until much lower, and then we had targets forecasted the entire way down in this decline. So we've nailed this thing pretty well. One thing that you can go back and look at the beginning of February for the PivotBoss Hangout we did for February is you can look to see how price responded to our failure to expand the range down below. And that's something I talked about the day it happened, especially to our premium members. This day right here single-handedly sparked this rally up here. And it was a significant rally because remember, price had been beaten down from 105 or so down to 44s. And then all of a sudden rallies 11 points, 25-point rally in a matter of 3 to 4 days. It's all because of that day down there that I circled. This day right here was a session where price was attempting to hold below the previous key range here. And when it failed to see expansion, that sparked a reversal across the range back toward the bottom of the prior key range. Right here, that low right there is 5505s or 5478s rather. And that's where price rallied to, and then bears came in and defended here. And what that did was it sparked a key range formation from 4437 up to 5505s with a midpoint at 4971. So this is all I defined that at the beginning of February. And what I mentioned was bulls will be looking to defend the zone down here, the bottom of value and the volume ledge, looking to defend that area. And so far, bulls have defended that area time and time again. Bears, I mentioned also, were defending the top between 54 and 55 for a shot at returning price to 49s and 48 halves. And now, very similar to what we've seen with the ES, this thing could be looking at some significant expansion soon because we have now seen plenty of back and forth trading range activity here, which is basically building energy for the next expansion move. And this expansion could be significant. One thing about this one is that composite VPOC has now shifted downward several times just in the last couple of weeks alone. So if you're looking at this chart, what you'll see is 52s here. That was the high volume node at the time. That was composite VPOC, 52s. And price came into that area and held it as support initially, held it as support, and then went offered. Once it went offered, price sold off back into the bottom of value, price bounced back up, and then right here, composite VPOC shifted downward to 5092 from 52s. And that area, after the shift down, went offered, and price sold off to new lows, bounced back, and then another VPOC shift down. Composite VPOC shifts down to 4984 from 5092, and now this area is being offered after today price rallied into 5092, and again bears defended prior value. So what this is the story right here that's showing you price discovery phase. And not only that, it's just showing you how when price is in a trending market, in this case a short-term downtrend, and VPOC goes offered, volume point of control. Volume is important. It tells you where the most buyers and sellers exchange hands, in this case the highest volume node, HVN. And it also shows you where bears and bulls do not want to trade, and that's in the rejection zones of the volume profile, or the LVNs, right? And in this case, what this shows is the market was rejecting value at 52. So when price drops down and comes back and value shifts downward, the market continues to defend value. Bears continue to defend it because they believe that it is still too overvalued. So price drops down, price pulls back, and again, value shifts downward, and bears are still defending that area. So right now, that tells you that bears are aggressive at defending value right now. They believe it's only a matter of time before they run stops through 48.45. And if that's the case, we've seen, you know, lower lows and higher lows, lower lows and higher lower lows and lower highs, lower lows and lower highs. This recent lower high here at 50.92 could be the beginning of a steady decline into 44.37. Give me 1 second. All right. So taking a look at this here, we have price basically trending downward, short term. Value being offered, value shifts down and goes offered again, and value shifts down and goes offered again. That tells you that bears are very aggressive right now and defending all rips. All rips are being defended, and what that usually suggests is a move to new lows. Anybody defending 48.45 here is in jeopardy of having stops run, but that's still the area where bulls are defending, because look at that, there's rejection below it. So bulls are still defending 48.49, that volume ledge, for a shot at returning price to 49.84, followed by a move into the top of value at 52.49. So this is basically an idea that shows that we're likely headed lower, but bulls have a last stand off these 48.45s. Because the one thing that you always know is that if you see bears defending significantly here, as they are, that means that there are a lot of buy stops above. So if bulls are able to run those stops through 51.28 and make it support, that could be a significant short squeeze opportunity into the top of the prior key range at 54 to 55. All right, let's take a look at crude oil now through the lens of the newest pivots. So right now we basically have a range here. Let's drop this away. Here's the monthly pivot range, 50.26 to 51.25. Anytime you're in a range like this, you're going to have a pivot range that kind of overlaps at each other. In this case, one thing that I see that's of note is that price opened below the monthly pivot range and then rallied into it and was immediately offered. So remember what I mentioned is, in a trending market, any pullbacks to the pivot range is an area to sell the rip in a downtrending market for a shot at new lows. So right now, this is an area where bears are defending, right? Again, and that's all due to the weekly pivot range there. We also have the weekly pivot range. That was the monthly pivot range. And the weekly pivot range is much, much more narrow, because remember, the previous week's range was very, very boxy. You know, you had some range in it, but there's a 4-point range or so, 3.5-point range, where it was just back and forth, nothing outside of that range. So the narrow pivot range right here on a weekly basis implies expansion this week. And right now we're seeing rejection up above. So this is a zone, again, where we're looking at potential expansion, and all we got to do is get outside the previous week's range here. Previous week's low is 47.80. Previous week's high is 51.28. And until we get outside that range, I think bears are going to continue to defend this area for a shot at downside squeezing into prior lows. Now, bulls, again, if they can get above this zone, you likely squeeze higher. But it, again, short term, it looks like bears are defending and winning short term right now. But 48.45 is the next level where bulls want to defend that volume ledge for a shot higher. All right, let's take a look at, I wanted to show gold right now. Here's a look at gold. And what I find fascinating about gold is it did something very similar to what the crude oil is doing right now. And that's, trending up and then trending downward and using the pivot range along the way. Recently with crude oil, we've mostly seen a downtrending market, but after it popped up, the recent price behavior looks like this, where it's basically just trending lower. And what I thought was really impressive about this one was that it was easy to identify what was going on because I was following the composite VPOCs here. And these are the micro composite HVNs. At one point in time, they were all composite VPOC until the next one came along and took it. And then the next one came along and took that one, etc. So right now, the micro composite VPOC is 1209.70. And that is actually just a composite VPOC, 1209.70. But before all of this came into play, all of these came into play, price was just sitting up here. And this is where I mentioned that bulls were attempting to defend the LVN at 55 to 50 right here for a shot at pushing this thing upward. But I mentioned the same thing I mentioned about the ES. When you have a lot of buyers coming in to defend, 1, 2, 3, 4, 5 straight days, or 5 out of 6 days, buyers defending the zone. If they don't get paid, all of their stops come out. And that's what that day was, the stops coming out. These bulls were indeed defending for a shot higher, but when it didn't happen, what happens? The stops come out, and then you see a move downward. And when I mentioned initially, I said the move would likely go down in the 10.5, followed by a move into the center of the key range here at 1193.70, and that's where we are. So what was fascinating about this move is that composite VPOC, the HVNs up here, went offered. So this one goes offered here. And again, remember, this is the market telling us the value is too expensive here, and the bears take it offered and price drops. And then composite VPOC shifts down, so value shifts down, bears successfully shifted value lower, and then they were able to take that offered and sold off price again. Then prices trade down here around the 1230s, and again, composite VPOC shifts down, and again, bears take it offered. So what's happening right now? Price is trading around composite VPOC at 1209.70. Bears are defending prices up here in the LVN between 1220 and 1224s. What I told our premium traders last evening was right here. Bears want to defend 1219.90, and they did today. That's the area to sell. They wanted to sell that zone for a shot at running stops through 1204s and perhaps new lows into 1162 with scaling points at 90 and 81 and 71. So that's the outlook right there for gold. This LVN at 1224.5, there's a key level there in the intraday time frame. Look at how bears have defended that zone in a downtrending market. All that implies is further weakness ahead, down into 1162.90, which is the inside lower 25% level of the key range. So 25% lower than the center of the key pivot. So again, this is an area here where we've been trending down, and in a trending market, the thing that my book, Secrets of a Pivot Boss, will continue to pound into you is the thought that if price is going down, you look to sell. If prices are going down, you look to sell, and you look to sell at the pivot range. You sell rejections at the pivot range, wherever they may come. You just look to sell rejections at the pivot range on the way down. Now, there's many other ideas and approaches that I teach as well. For example, looking at value area from the previous month, looking at Camarilla levels, but basically any type of pivots that you can trade with, For example, I'll be introducing my PivotBoss pivots this Friday. Any kind of pivots that you can trade from, especially if they're based off of some kind of formula, they can all be used the same way with pivot trend analysis, with basically compression and expansion ranges, so a compressed pivot range. You know, all of those concepts really apply across the board to any types of pivots. That's why I developed the approach that I did, so that in a trending market, I'm focused to selling. I'm selling in a downward trending market. And once you get to a key zone in the charts, then you can look to defend. And the key zone was between 90 and 93 to defend. And that's where buyers came in to defend. And right now they're doing okay, especially if you scale out along the way. But if these buyers fail to defend, the stops will come out and you'll see a big move down. If bulls can get above these 1224 halves, then there's a shot at running these stops back into the next highest HVNs, because price always follows volume, especially large volume. All right, let's take a look now at the NQ. Here's the NQ, and basically the NQ has been trending higher very, very nicely. Significant trending market here. And again, this is something that if you go back and watch the February Hangout in our archives, what you'll see is I talked about this range right here that was developing, and 1, 2, 3.5 months of trading it within this range. Once a breakout occurs, you're likely going to get expansion that's 2 to 3 months in the direction of the break. That's what I mentioned last month. We got a breakout through the top of the range, and look at how perfect this whole thing plays out. I mean, it's all based on price range. Here's the high right there. Mark that over, okay? That's the last recent high where price sold off. When price finds that low and rallies back up, this is the high that it used. It came into that level, tested it the first day. The second day, it takes it bid, which is this day. And the next day, this is where you defend if you're a bull from above. And it's that little sequence right there. That little sequence means everything. It's a sequence that you see time and time again when markets are attempting to expand the range. Here's that sequence again. It's the same exact sequence. You found a high of the 2-day highs, 3-day highs. Price goes bid through it on the big day, and then on the following day, bulls come in to defend the top of the previous range and take this thing higher. And that's why I mentioned in our commentary this afternoon for our premium members, the next key level was the previous week's high at 44.64, and that's the area right there. It just took it bid. Buyers are going to come in to defend 64s in the upcoming day for a shot at upside expansion into 4,500. Failure to hold 64s opens up a big time test between 44.25 and 44.27. Those 27s and 25s right there, that's the composite low volume node. So if I take off this right here, you'll see the low volume node in there. So right there, you see that low volume node, LVN, in the composite profile, and that's where bulls are defending. So that's a rejection area. And in a trending market, bulls want to defend that rejection from above. So you push through it. So right now we've seen several sequences that I pointed out, right? Where price comes into this high, pushes through it, makes a support, and then you see the expansion. It happened again here. It has a potential to happen again tomorrow, the complete 3-day pattern, which could lead to some very significant trending movement. Now, even if this little area doesn't hold tomorrow by itself, it doesn't matter if this thing sells off all the way to 43.22. That still makes for a solid buying opportunity for the next major swing move up. Because here we are, if we back this thing up a little bit and you look at this thing from a long-term perspective, we've just been trending higher for years and years and years, right? And that's why I've said time and time again, every sell-off is a buying opportunity. I've been a perma bear, bull, but I've been a short-term bear, right? So short-term, I've said this is a high, we're likely looking for a weakness. This could be a high, we're likely looking for weakness. But within the longer-term framework, every sell-off is a. So if this is our expansion, which it is, this is our expansion that we're seeing right now. The idea is to see further trending behavior to the upside. And again, we can get our key levels out. If this is 43.43 and we just got our expansion through the top of this multi-month range, which I've been talking about, the idea is that we trend higher for 2 to 3 months, and that takes us into March, April, and May. And if that's the case, here's the 50% expansion target we just reached, but the next real target is going to be 46.05. So that's the next major target to reach. And even if we pull all the way back to the top of the key range at 43.43, it still makes for a solid buying opportunity for the next wave up, which would put us probably right here at 48.68. So we could be looking at some major trending moves here to come. Short term, I would say if price can't hold above the CLVN at 25, then there's an opportunity to drop this thing into 22 to 43. And even perhaps a little bit lower, but you don't want to see this thing drop below 42.70s. 42.70 is now it's the midpoint of the previous month. And here's the other thing, right? If we're looking at this through the lens of the pivot range, this is the monthly pivot range right here for February. This is the monthly pivot range for the new month of March, and look how much wider the month of March's pivot range is compared to the February pivot range. This range was very narrow and price trending up the entire time. Remember I mentioned before, compression leads to expansion. Here's your compression right here, and it led to expansion. And expansion leads to compression, and that's why you get this wide pivot range here to give you a heads up that the upcoming month could be compression. That's why I mentioned that if price doesn't push through 4,500s here or can't establish itself and breaks below the CLVN, that's going to be your confirmation that we could see a move all the way back to the midpoint of the previous month's range, which is a zone where buyers want to defend, and then that's where your pivot trading range could begin, right? Build another range here ahead of the next wave higher. But either way, again, this thing continues to trend higher until proven otherwise, and right now this thing's on fire. Short term, keep an eye on those 25 to 27s. Our buyers, our traders in premium were buying that thing all last week, and we've had some fantastic calls as well, as you can see from our recent winners post recently. All right, let's see. All right, so here's the NQ, and it's been fantastic trading recently. What I wanted to do is drop down into the intraday time frame for a moment. Here's the NQ in an intraday time frame, and in this time frame, I'm usually plotting a 1-day volume profile and a 5-day volume profile. Volume profiling is also covered in Secrets of a Pivot Boss. I think it's extremely important. Market generated information, low volume nodes, high volume nodes in the profile really help to highlight areas of acceptance and rejection. And when you really boil it down to its finest points, trading is all about identifying value and identifying rejection. And buyers are looking to take rejection back to value, and so are sellers. And that's the basic approach to trading. So if you see right here, this is your 5-day volume profile, and then it goes up here. Well, down here, this is the bottom of value, 44.37, and this blue shaded area right here is prices that are considered below value. So if you look over here, when price hit that zone, this is where buyers were defending that area, below value. And the idea is to return it back to value. Value at the time was a little bit higher at 44.52s. It shifted down right here, and then price got to 43. So bulls are looking to take prices from below value back to value, and then across value. And across value would be the top of the value here at 44.59. So that's the basic approach that I teach in general. It's even in masters. When I'm teaching in masters, it all revolves around auction market principles. It identifies It revolves around identifying key zones in the volume profile, like the areas of rejection and acceptance. And then it revolves around price range, because price ranges are very important. And here's the NQ again, in a zone where the previous week's high becomes the area to watch. Here's a key level that I'm having our traders watch, and it's 44.64. 44.64 was the high last week. And then you see that it's also an area today that when price rallied through it, it came back, and that's where bulls defended for a shot higher. So that's the area again where we're watching in the upcoming session. Will bulls continue to defend 44 to 65 for a shot higher? Because that's going to take us into 4,500 with a shot at prices beyond that. But failure to hold above 60 here implies a move back to value. And that's going to put you at 5-day value at 44.43. So that's your early idea of what you can do Tuesday morning. Bulls will be looking to defend any pullback to 64s down into 60 for a shot at new highs into 4,500. So that's a trade right there with at least 40 points on it, if not more. And if you're a bear, then the idea is to run stops through 44.60. Below 44.60 gets you a quick move into 44.43. That's a 17-point move right there with a shot at seeing prices below value, below 44.37. So again, it's all about price range, and it's identifying areas of rejection and acceptance in the charts. And right now, with how prices continue to trend, it's been more about looking to defend prior resistance and turn it to support. And that's the case that we're illustrating in this example right now. Is previous resistance, the previous week's high. You see WHI, that's week's high, the previous week's high. And that's where bulls came in to defend today for a shot higher. So that's going to be the area to watch tomorrow. And if it fails, you know exactly where it's going. 44.43 with a shot to test prices below value. All right, I wanted to again bring up the web page just for a moment here. And basically, I want to say thank you for attending this PivotBoss Global Hangout for the month of March. And I wanted to just give you a quick note that this offer here for the book is going to be fantastic. And I'm really, really excited about this opportunity to talk about PivotBoss pivots on Friday. Even if you already own the book, you can still get in on this webinar. If you do not, visit this page here, or really any page at PivotBoss, you'll see one of these blue and white banners here. And basically, that's your ticket right there to get into the Introduction to PivotBoss Pivots course, in addition to getting these indicators for that are pertinent to the book, and also for PivotBoss Pivots. If you want to read some fantastic testimonials, we have many here. You can also go to Amazon and look at all of the 5-star ratings there. Our prices are 17% cheaper than Amazon, and we have 2-day shipping to most places in the US. And it's just a fantastic book. It's a book that teaches all of the foundational concepts that you need as a trader: auction market theory, volume profiling, market profiling, floor pivots, pivot range, Camarilla equation, and much, much more. I show my basic approach to trading the market in a number of ways, regardless of if you're an intraday trader, a swing trader, position trader. I use yearly pivots and introduce yearly pivots into this thing, and talk about research that spans from 1970, so all the way through 2000s. And it's something that every single trader that's read the book has been so happy to have come across it. And this is the feeling that I want all the traders to have. I put a lot into this book, and if you're someone that really enjoys my premium commentary or enjoys my master's work, then you really know that coming across this book first lays the foundation for everything else that I teach at PivotBoss. It's something that I still believe every single trader should have in their library, and it's something that it can get you on the right track, or can help supplement what you're already doing with regards to trading. So this is the area to come if you want to check out that offer. Additionally, if you go to PivotBoss.com, what you'll see is right on the spotlight here is the PivotBoss Hangout. So if you want to replay this Google Hangout, you can do it from here. Or if you want to rewatch some of the others that we've already done, go to PivotBoss Hangouts from the free content tab. And right there, PivotBoss Hangouts, by clicking on that, you'll come up to a page that has all of the recent Hangouts that we've had. So you can rewatch all of the rest and see how the analysis turned out by the end of the month. All right, everyone, I want to say thank you all very, very much for attending this PivotBoss Google Hangout for the month of March 2015. Please take advantage of that Secrets of a Pivot Boss offer. It's going to be something that I know you'll enjoy. I look forward to your feedback for the book, and I look forward to seeing you Friday for my Introduction to Pivot Boss Pivots course. All right, everyone. For everyone at Pivot Boss, I am Frank Ochoa, wishing you a great evening, and I'll see you soon. Take care.